Hi everybody, I hope you are doing very well. In this video I'm going to talk about the IPO stylized fact. There are several stylized facts related to the IPOs that is very important to know. The first one is the IPO cyclicality. Both the number and the proceeds from the IPOs are highly cyclical, which means that when times are good, many companies go public and raise a lot of money, and when times are bad, the number of issues dry up. Note that this is not completely clear whether this is a demand or supply effect. In other words, in good times, there could be more demand for raising money since companies have more growth opportunities. It could also be that in good times, the supply of money goes up since investors have more money to invest. Most likely, both effects are at play. In any case, the data shows a strong cyclicality of the IPO market. Indeed, the CFOs highlight overall stock market and the industry conditions as the most important factors behind their decision on when to go public. The second stylized fact is the IPO underpricing. Underpricing refers to the phenomenon that the first day closing price is on average higher than the IPO offer price. To put it differently, a typical company seems to be selling its shares at the IPO with lower price than what they could have charged. This is also typically referred to as money left on the table. For example, assume that a company sells 10 million shares with the IPO offer price of 20 euros. If the closing price at the end of the first day is 30 euros, you can compute the money left on the table as follows. 10 million shares multiplies 10 euros that they could have charged more. So this gives you 100 million in euro that the company supposedly could have earned more by selling that amount of shares. This means that the company probably could have earned 100 million more by charging the true quote-unquote price for its shares at the IPO. IPO underpricing varies across time and typically in the booms is the highest. For example, the average underpricing in the US in 1999 was around 80%. This means that just during the first day, the average IPO that year increased 80%. The average underpricing across most of developed world has been between 10 to 20%. And the interesting and perhaps puzzling fact is that this is a persistent phenomenon and does not seem to be going away with time. While the previous graph was showing the data from the US, the IPO underpricing is universal. Here you see underpricing across many countries with China, India, and Korea having an average underpricing of about 60 to 120%. You may be wondering if the IPOs on average increase so much in price in the first day, it must be the easiest path to become a quick billionaire by investing in all IPO offerings and gaining the average return of, say, 20% in one day. Unfortunately, this does not work. At least one important reason is that if you subscribe for all IPO offerings, you will disproportionately receive more shares in bad IPOs, those that they are overpriced, and hence there is not enough demand for them. For IPOs that are kind of success and the price is low, they will be hugely oversubscribed and therefore there's not much chance of receiving the shares. Therefore, you will end up having shares always in the bad IPOs and sometimes in the good IPOs, and as a result, you will not be able to gain much from investing in the IPOs. This is a very nice example illustrating what I was saying. You will see that while an average IPO underpricing is 15% in this example, since you will receive more shares in bad IPOs, the average return you can make in this example is 0%. Note that as the underwriter, you do not want to price the shares too low or too high. If it's too low, the bankers also receive less money in fees since the fees are proportional to the offer price. The issuing company also leaves too much money on the table. On the other hand, the underwriters do not want to price the offering too high either, in which case their clients and long-term investors may feel ripped off and may not also be interested to join for secondary offerings from the company and so on. Since the discovery of the IPO underpricing a few decades ago, there has been huge amounts of work and research to understand and explain this kind of puzzling phenomenon. Many theories have been proposed and each of them has its own fans. Up to now, while we do have evidence supporting all those theories, there is no consensus on which theory is really the most important one. Many theories rely on information asymmetry between different types of traders. Some other theories argue that the first day pop or the first day increase in price works as a marketing and advertising device that is good for the issuing company. Other theories relate to the litigation risk. If the stock price drops and early investors lose a lot of money, it will be more likely that the company faces some litigations on the side of investors, arguing that the company was hiding some critical information and so on in the initial filings. Of course, conflict of interest on the side of investment bankers is one popular theory, saying that since bankers guarantee the offering price, they intentionally underprice the offering to limit their losses. This way, they can also keep their clients happy by offering them those cheap IPO shares. In a survey of CFOs, they ranked the following three as the most important factors explaining the IPO underpricing in their view. First, they believe that it's a way to compensate investors for taking the risk of the IPO, which speaks to the information asymmetry theories. Second, they believe this is to increase the post-issue trading volume of the stock. And the third is that the underwriters underprice to please institutional investors. The third IPO stylized fact is the fees. The typical spread charged by investment bankers in the US is 7%. It is particularly puzzling why there is not much sensitivity between the fees and the issue size. Almost all issues ranging in size from $20 million to $80 million paid fees of around 7%. In fact, if you look at the developments and the distribution of the fees, you will see that through time the 7% spread has become more and more prevalent, replacing all fees above 7%. Also, you see that the proportion of companies charged below 7% has also increased. This graph shows you the underwriting fees in the US disaggregated based on the IPO proceeds. Again, the 7% spread stands out, and also apparently there is a convergence across different IPO proceeds toward the 7%. Note that the clustering of underwriting fees also seems to be universal, while the fees themselves are not. This graph is a bit complicated to read, but documents something very interesting. The bars shows you the most popular and most common underwriting fees in each country. For example, in France, the most common underwriting fees is 3%, while in the US is 6%, whereas in Hong Kong is 2.5%. The points in the line for each country reflects the frequency of observing that particular fee, and the numbers are shown in the right axis. For example, in France, about 40% of companies are charged exactly 6% fees, versus in Hong Kong, about 95% of companies are charged exactly 2.5% in fees. When CFOs ask about what determines their decision in choosing particular underwriters, they highlight the importance of overall reputation of the underwriter as the most important factor. In fact, companies do not seem to be considering much the fee structure as an important factor in their decision. The fourth and the last IPO stylized fact I would like to discuss is the long-term underperformance of IPOs. This graph shows you the average 3-year buy and hold return of the IPOs after adjusting for market returns. As you can see, the long-term performance relative to the market is negative in majority of years. Some researchers have concluded that this long-term underperformance reflects investor behavioral biases that cause them to be over-optimistic during certain periods. Some have discussed that this could be also due to managers' ability to successfully time the market. On the other hand, some have argued and provided evidence that this seems to be due to particular characteristics of the IPO companies, for example, their size, growth opportunity, etc. And if we compare their performance with companies like themselves, as opposed to the overall market, the long-run underperformance disappears. Overall, this is still an open debate among researchers. Thank you for watching this video, and I wish you a pleasant day. Bye bye.